Welcome to Biztech's Investor Conversation Show. I'm Brian Fernandez, and our guest today is Sanjay Gujral, the chairman of the Singapore Venture Capital and Private Equity Association. Sanjay, welcome to the show.
Thank you. Pleasure to be here.
Now, Sanjay, could you start by giving us an overview of SVCA?
Sure. So, SVCA, we're actually coming up to our 30th anniversary next year. And so our origins go back to 1992, when we had a fairly nascent venture capital ecosystem developing. And I think we were a few years post Hong Kong. Hong Kong was sometime in the late 80s, and in Singapore, SVCA came into being in 1992. It was about venture capital, it was about Singapore, it was about what is happening in the Silicon Valley and connectivity thereon. But then the association in itself, along with, I'd say, the broader market, saw an organic growth where we started having players investing in early stage private equity style strategies. And fast forward back to today, we've evolved to a situation where not only do we have VC funds, but I'd say we also have people doing stuff pre-VC, looking at the ecosystem onto some of the global buyout funds at the other end of the spectrum. The other development is the entire move from only VC and PE to taking a more broad-based approach onto private capital. And that's not only with, we'd say, with the various stages of investing in companies' life cycles, it's also, within the capital structure, private credit, gaining traction, real assets. There is a lot of synergy between different asset managers. So we're just trying to harmonize all of that and take a view of the private capital ecosystem. And that view is, again, not limited to just the managers of these assets, but it also includes our investors, be they the traditional institutional investors, be they family offices, which, as you appreciate, gaining a lot of traction globally and in the region out here, as well as service providers. So the entire gamut of service providers who work very closely in the entire investing domain. So that's what the SVCA is all about. As we like to put it, we are the common voice of the private capital ecosystem across managers, across institutional investors, family offices, and service providers in the region.
And what's the size of your membership like?
We're roughly 180 members, and that splits, again, roughly half and half between asset managers and service providers. Members, these are firms, not individuals. So the way we are structured is we have firms as members, and then we have representatives from the firms who get assigned. So it's 180 firms.
So Sanjay, one of the key things with Singapore is the fact that it is the regional hub for PE and VC funds, isn't it?
Yeah.
Now, one of the key things with Singapore is its focus on the growing its innovation economy. Could you kind of paint the landscape of what the current policies of the government are in terms of its key agenda points?
Sure. So, one has to credit the Singapore government on maintaining foresight, right? So even as we look at the results of the last few years, more coming into prominence post the pandemic, but the work on that starting in the early part of last decade, where the entire tech ecosystem really came into its own being out here. The seeds of that were actually sown by the Singapore government a lot earlier. And there were various initiatives that they took, be it in terms of funding support, be it in terms of putting together universities, researchers, businesses, be it in terms of getting some of the Singapore investment firms to invest in funds outside of Singapore, and in those early days used to typically be the US, deputing people out there, bringing back some of those people, inviting large tech companies to again headquarter in Singapore, attracting talent and developing the entire ecosystem. And we're seeing the fruits of that all play out. And again, it's all foresight, which I'm not sure they get enough credit for in terms of what they've done out here. And on a go-forward basis, well, there are various initiatives at play. So we've had the recent announcement that you see from SGX around SPACs. And clearly the House has been divided that will this be successful or will it not be successful? Well, listen,
there's a school of thought that says the SPAC game, the party's already ended.
Well, listen, I'm not gonna add fuel to the fire because there are enough points of view both ways. But if we look at the rationale behind creating this entire product opportunity in the Singapore context, it's a fairly strong rationale. If you look at the traditional capital market in Singapore and you look at the typical retail investor in Singapore, has been fairly conservative in their orientation.
Yes.
They have chosen to invest in large businesses. They have chosen to invest in what they perceive as stable businesses, be it real estate, be it financials, some consumer names, some industrial businesses.
Which is why REITs have done very well in Singapore.
Which is why REITs have done very well, indeed. Indeed, and that's been the traditional landscape, right? But again, if you take a look at where value is now being created, you can't ignore what's happening on the technology-led side. And what's happening on the technology-led side clearly in Singapore and in the region. And for Singapore, as you mentioned, it is that role of a hub that it plays. That entire gap in taking businesses from private markets to public markets is something which needs a fix. When your IPO markets are not necessarily as accepting of new issuances, when your businesses are not necessarily as large as all businesses being able to travel to the US, then there is a need for someone to step in and say that, listen, there is still value being created. There is an important part of taking these businesses from private markets to public markets. And you bring in an instrument, and I call SPAC as an instrument to help facilitate that. And I think the combination of what the government is doing, the recent announcement around Temasek making certain investments along with the Singapore government in later stage businesses.
Yeah, and that's a lot of money. It's $1.5 billion.
And that's all helps in mobilizing. See, the thing is, you can't expect the government to do everything. But what the government does well is mobilize things in a certain direction. And once the momentum kicks in, then you'll find private players will come in and play their role as they should.
And Sanjay, it's a very natural thing. Back to what we talked about earlier about Singapore being a hub for the industry, for the region, in fact. Naturally, the hub should be the place where also these companies are listed. The challenge, obviously, is, which has been in the past, is the subject of valuations. Large unicorns can get better valuations in the US or now even in Hong Kong. So do you see that? What do you think the levers are going to be in terms of moving the needle in a northward direction in terms of valuation?
Well, again, I don't have a crystal ball to talk about valuations. I think if you were to view the traditional Singapore retail investor, that investor will potentially continue to be conservative. But that mindset is seeing some change with people witnessing the success that's taking place in the early stage, especially tech-led investing space, which again, the average retail investor is not able to participate in.
Yes.
Right? Now, will larger businesses find greater valuations in the US, driven by the massive liquidity out there? I don't have an argument to challenge that assertion, and it's quite possible. But will a business which is sub 500 million in market capitalization, will that really have an effective public market debut and sustain trading and enjoying those valuations in the US? That's the big question mark. And that's where the entire opportunity set for Singapore to develop for, at the very least, the mid-market companies and provide them that bridge.
And Sanjay, that actually seems to be the consensus of people that I've talked to. It's the mid-market opportunity is where the SGX has that niche potentially.
Absolutely, and that's a large and sizable opportunity.
And also what it does is, even for the ecosystem itself, whether it's technology or private equity, it gives relatively easier exits on opportunities and also liquidity for investments in companies. Because, you know, for 200, 300, 400 million, basically you can go public in a well-regulated exchange. That's attractive.
Absolutely.
Now, I wonder you to kind of paint the picture for the whole industry as a whole, especially among your members, because 2020 and 2021 actually have turned out to be a time globally of high growth and investment in venture capital and private equity. With your member set and in your data, where's the money being deployed among your members?
So again, I think you need to break that up into segments of the market. And there is no one broad brush to paint it with. So if you look at the early stage landscape, right? And within the early stage landscape, bulk of the capital is still chasing. And when I'm saying capital, bulk of the capital in dollars deployed is potentially still the established, well-funded businesses into their Series D and E typically. But at the same time, as you look at the sheer number of deals that are being done, you'll find that it's really the seed and Series A where you're seeing very healthy traction within the region. Sectorally, I'd say it's the entire deep tech landscape. So be it fintech, be it health tech, be it AI, ML, that has clearly seen a fair bit of investing or a fair bit of capital and interest going in there and will continue to do so. As you take a more later stage point of view, we'd say some industries have clearly proven to be beneficiaries. So be it healthcare, be it tech services, select elements of financials, and those continue to select elements of consumer. Those continue to attract investment. Some of the more leisure and hospitality businesses have potentially suffered. So it's a mixed bag. And I'd say, Brian, that it's really about which segment of the market you're referring to.
And Sanjay, one of the interesting things that because I've obviously been tracking this landscape for a number of years, you already see the early VCs who came into Asia in the early part of the last decade, 2010, 2011, with their first funds. They've already been successful. Some of the funds have closed. I mean, these are some of your members I'm referring to. They've now got Fund 4 and Fund 5 because they managed to get a track record and really rode that whole ASEAN tech scene growth. Yeah. Which of your members you think has characterized, that example that I've just used?
So, to be honest, Brian, I would prefer not to name individual firms.
Okay.
Because, each firm is a member, and I don't want to name one over the other. But as you've referenced, enough success stories within the entire ecosystem. The continuing point that I'd make is, and what's heartening, is that while you have the established success, and you said fund 3, 4, 5 for some of these players, it's also interesting to see that there is continued development of new managers, and that's healthy. That's healthy. Some of these managers that we, in fact, end up interacting with fairly young. So one needs to have a bit of skepticism. But at the other end, the energy that they bring to the table can be quite enlightening.
So Sanjay, I want to now flip the other side of the equation more towards your world. The PE landscape in the region has become more and more vibrant. Of course, many of the PE firms are headquartered in Singapore. Could you paint us a picture of the regional PE landscape now?
Sure. So, Brad, it's interesting that you use that terminology regional, because as we look at the PE landscape, we've again got people from single country focused firms to the global buyout firms. And of course, you've got the pan-regional firms in between. The interesting gaps in the market, if you see, most of the global buyout firms and the pan-regional firms have just grown so large that the typical check sizes for them are
huge
higher than what the opportunity necessarily lends itself to. As you look at the country-focused firms, they cannot necessarily grow much larger than what the country-specific opportunity affords them. And which is why the pan-regional firms probably have an important role to play in that mid-market. And you're seeing that play out very well.
And among your members, which sectors are typically favored? I would think real estate will be one of them. And also, what are the ticket sizes in general?
So, Brian, again, it's a fairly large and diverse member base. And in fact, real estate is something that we have traditionally, as SVCA, not had many of the real estate firms as members within the SVCA. So it's more the non-real assets businesses that you would find most of our member firms participating in. Of course, firms like ours, Everstone, we also have interest in real estate, as do some of our other member firms. But if you were to view real estate as a standalone, or real assets, in fact, as standalone, you'd find not that much of penetration into the traditional SVCA member base, something that we have, in fact, hope to change over time as we take those private capital point of view. Coming back onto sectors, I'd say within the Southeast Asia context, clearly financials and consumer, both on a relative basis, stand out. But not to say that more traditional manufacturing and not to say that healthcare are of any less importance as far as the local the opportunity is concerned.
Sanjay, looking ahead, what are the key investment themes and trends that your members are seeing into 2022?
That's again a rather wide.
Yes, because you've got to answer from both sides of the equation, the venture and the PE side.
So listen, the one common, I guess, is digital and digitization. And the impact of that, so be it at the very early stage or be it at much later stages, that's the one thematic that I think all investors are working with. I was going to use the term grappling, but grappling would be the wrong term because people are, we're now beyond the grappling stage.
Beyond grappling. I think grappling was March, April, May last year.
Yeah, right. And that's the one common thematic that people are working with. The other arena that I think is starting to see a lot of traction and that momentum will gain is the entire move from ESG and hygiene towards more green finance, sustainable investing, impact investing, and you will see that emerge. I'm not sure if it's a 2022 real emergence or it's over, by 2025, but clearly that entire ecosystem is going to attract a lot of attention.
Now, Sanjay, it's been a fascinating conversation. Any final thoughts you'd like to leave us with before we conclude for the evening?
Oh, fascinating talking to you, Brian. Thank you for reaching out.
Now, thank you very much for taking your time, Sanjay. I'm Brian Fernandez, and I've been speaking to Sanjay Gujral, the chairman of Singapore Venture Capital and Private Equity Association, on Biztech's Investor Conversation Show. This video will be on our Facebook and LinkedIn sites, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks again for tuning in.